Good day, Junior Tickies. I'm Mrs. Brimacombe. We are going to look at Activity 2, Partnerships. Part A consists out of concepts. Use the table in your answer book to illustrate the difference between a sole trader and a partnership. So we need to look at with regards to liability and continuity. In a sole trader, they have unlimited liability, which means that in the case when the business goes bankrupt, in other words, they're not able to pay their debt, a partner can lose their personal possessions, and same in a sole trader. It's not limited to the business. When we look at continuity, in a sole trader, it will dissolve and the same as in a partnership. A new partnership agreement will need to be formed. Part B focuses on the ledger accounts. So we are now going to look at all these questions individually. Make sure that you familiarize yourself with the information. Take note that the current account Pixton, debit means negative. If you look at how the information is given to us, they provided us with the end of last year's balances and the end of this year. If our accounting period ends 30 June 2021, it means it starts the 1st of July 2020. Before you start with the question, make sure that you go through all the information which is given to you. Looking at question 2.2, calculate the interest earned by each partner. So if we look at calculating interest, interest is always calculated on the capital balances. It is very important to always take note that the partner increase or decrease their capital during the year and has it been recorded or not. So if we look at Pixton reduced his capital on the 1st of March 2021. This transaction has been recorded. Now they provided me with the end balances. So if I look at my accounting period, if it ends 30 June, it starts the 1st of July, this was decreased on the 1st of March 2021. And because this has been recorded, that balance of 600,000 is the balance after the partner decided to reduce his capital. This means we need to calculate the capital balance for the beginning of the accounting period. And to calculate that, we need to work backwards. We need to add. Why did we add? Because he reduced it, which means that his capital balance was more in the beginning of the accounting period. So now to calculate the interest. Interest was at 10% per annum, but from the 1st of January, it was increased to 12%, which means that interest must be calculated for 6 months at 10% and for 6 months at 12%. So when we look now at Pixton, 750,000 times 6 months, and then we have to calculate 750,000 times 12% for 2 months from January until March. And then the third part of this calculation, his new balance, 600,000 times 12%, 4 times 4 divided by 12. So my total interest for this accounting period for Pixton is 76,500. Again, interest was increased on the 1st of January from 10% to 12%. He reduced his capital on the 1st of March 2021. So be careful when you look at Pixton calculating the interest. If we look at Ford, his capital balance stayed exactly the same. How do I know? Nowhere did they mention that he reduced or increased his capital. So for 6 months, it must be calculated at 10%, and for 6 months, it must be calculated at 12%. So the total interest, 25,000 plus the 50,000 equals 55,000. Completing the current account of Pixton. Remember, what goes into the current account is what a partner is entitled to, which is your primary distributions of profits. This is salary, bonus, and interest on capital. On my debit side, I would always have what the partner has taken from the business. So this means that drawings is closed off to the current account. Then we need to calculate our final distributions of profits because he's entitled to secondary or final distributions of profits as well, based on a specific ratio agreed upon. This means that before I can complete the current account, we need to also complete the appropriation account. Appropriation shows the distributions of the profits. So starting with the current account, we are going to start with the opening balance. Reminder, they said debit, which means it's a negative balance. It will appear on the debit side, 13,000. Salary, 243,000 per annum. He's entitled to a bonus, but now they said to us 100% of the monthly salary before the increase plus 2.5% of the net profit. This means we now need to find out what was his salary before the increase. So if we go to the additional information, Pixton received an increase of 7.5% on his monthly salary on 30 April 2021. This means that for 10 months, his salary was at 100%, and for 2 months, it was at 107.5%. Again, there are different ways in how we can get to exactly the same answer. I'm going to use X to solve this because using this, it will provide me with the amount before the increase. So we say for 10 months, it was at an X amount, and for 2 months, it was at X times 107.5 divided by 100. So to solve X, we have to take 107.5 divided by 100 times 2 plus 10 equals 12.15x. So to get x alone, we have to take 243,000 divided by 12.15x because that would have been divided by 12.15. A little bit of mathematics in here. So what is x equal to? 20,000. This provides us with the amount before the increase, and that's what I want. So now we can take 20,000, it's his monthly salary before the increase, plus the net profit was 800,000. So we have to times that by 2.5%. So the bonus that Pixton will receive is 40,000. If we look at interest on capital, we've already calculated the interest on capital, 76,500. Now, if we can close off our drawings, what has the partner taken from the business? But now we also need to look at, was there any additional drawings during this accounting period? So if we look at the information given, point number 4, Pixton took 720 worth of stationery for own use on 25th of June. This has not yet been recorded. This means we need to add it to the 250,000 and then we can calculate the total drawings. Please remember, I cannot balance this account now. We still need to show the final distributions of profits. This means we need to calculate it. We need to complete it in our appropriation account. Sorry about that. So if we look at the appropriation, I would always have on the debit side my primary distributions of profit, which means salary Pixton, 243,000, salary Ford, 350,000, and then we have bonus Pixton, which we've done in our current account, 40,000. But now if I look at Ford, Ford is also entitled to a bonus, 100% of the monthly salary plus 2.5% of the net profit. So if his salary is 350,000 per annum, to find the monthly, we have to divide it by 12, and then we're going to say 27,500 plus 800,000 times 2.5%. That equals his bonus for this financial year. The partners are entitled to interest on capital. Interest on capital is the total interest. So there's a calculation. We need to add Pixton plus Ford. So the total interest for both of them added together is 131,500. Once we've calculated or entered all the primary distributions of profits, the net profit will always appear on the credit side. This is what we're going to distribute. Net profit minus the primary distributions of profits equals the remaining, which should be distributed in a ratio 3:2. This will be closed off to their current account. So if we look at Pixton, 8,000 times 3 divided by 5 means that he will get 4,800, and Ford, 8,000 times 2 divided by 5 means that he will get 3,200. If I take the debit side and I add it together, it should equal the credit side, 800,000. Once we've calculated the final distributions of profits, the appropriation account was debited, account credited, current account Pixton. Now we can calculate the final balance by taking the credit side minus everything on the debit side, which means that his new balance is 100,580. The last question, accounting equation, we had to refer to transaction number 5. Ford returned trading stock with a selling price of 3,300. The business used a markup of 65% on cost. This has not yet been recorded. So if I look at this, number 1, we need to calculate the cost. To calculate the cost, we have to say times 100 divided by 165. Because the trading stock was returned by Ford, it means account debited trading stock, account credited drawings, and you have to name the partner, Ford. This will have a positive effect on my assets and a positive effect on the owner's equity. Thank you very much. In our next activity, we are going to focus now on the note to partnership, which is new, the capital and the current account. I want to leave you with this quote: a little progress each day adds up to big results. I hope you have a wonderful day.